Hi guys, welcome back. Last time I talked to you about the Dow Jones Industrial Average and what the stocks are in that average and how that number, currently around 26,000, gets computed. Today we're going to talk briefly about the S&P 500. There's only 4 slides for me to discuss with you, just to give you a quick overview of what it is the S&P 500 is, why it should be important to you, and how that number gets calculated. So S&P 500 stands for, well, first of all, S&P stands for Standard & Poor's. Standard & Poor's is a company that was founded back in 1860, and they offer financial market intelligence. They have created multiple market indexes. If you go to the Standard & Poor's website, you can see all sorts of different indexes that they have. Remember, an index really is just kind of a basket of stocks. I use that term also with ETF. Obviously, they're a little bit different, but an index is a collection of stocks or bonds that could be purchased as a whole if you buy a mutual fund or an ETF that tracks that index. The most well-known of all these indexes is the Standard & Poor's 500, obviously. Interestingly, it's composed of 505 stocks of the largest U.S. stocks by market capitalization. So remember, market capitalization just means the share price times the number of shares. So what this is telling you is that there are 505 stocks of the essentially largest companies in the U.S. stock market. Now, that isn't absolutely true, because obviously Tesla has become a very large market capitalization company, and yet they're not in the S&P 500 yet. And we can talk about that in just a few moments. So why is it 505 stocks if it's the S&P 500? Well, some companies offer different levels of shares. You might see A shares or B shares or C shares. And oftentimes all that relates to is the number of voting, the weight of voting that you get at a company meeting. So someone with A shares will have far more weight in their voting than a C-share company, or a C-share company or a C-share stock might not even offer you any voting weight. Honestly, if you don't care much about whether you get to vote at the company's annual meeting, then you might choose a C-share, which oftentimes is going to be less expensive. Though not always the case, Google's stocks, their A shares and B shares, were actually trading differently, such that the B share was more expensive than the A share not that long ago. Because the index is composed of so many large companies, it's widely regarded as a barometer for the U.S. economy. In fact, it covers 80% of the stock market by capitalization. So currently the S&P 500, about 20% of it you're going to see as technology. That's really just a reflection of what the U.S. economy is like at any given time. Right now we're definitely in a technology-driven environment, and so you'll see 20% roughly being technology. So what does this number mean when you see it on the news each night, the S&P 500? This index is calculated based on the share price and the number of free-floating shares. So what does that mean, free-floating shares? Well, a company may have 1 million shares, but it might be that only 800,000 of them can actually be bought by the general public, and the other 200,000 of them are controlled by some other means. So the S&P 500 only weights the free-floating shares, the number of shares available to the public, in their calculation. So if we do that for all 505 stocks, we take the share price times the number of free-floating shares, and we add all those up, you end up with a really, really big number, one that would not be easy to report each evening. So to make this more manageable, it's divided by a proprietary number to get it to the current 4-digit number that you hear reported each evening on the news. Why should we care about this? Well, the S&P 500 is more diversified than the Dow Jones Industrial Average. Remember, the Dow Jones only has 30 stocks in its index. The S&P has 505. Therefore, just the fact that there are so many more numerous companies, if you're buying an ETF or a mutual fund that tracks this index, you will automatically be more diversified. Diversification, again, helps to lower risk. The more concentrated your money is in a certain area or a certain company, the more risk you're taking if that company or sector falls upon hard financial times. Again, it's 80% of the stock market capitalization as well. So 80% of the money in the stock market is going to be within these 505 stocks. Now, I mentioned a little bit ago, Tesla, that's widely reported how well their stock price is, and yet they're not in the S&P 500, and you may be asking why. Well, there are some criteria for being part of the S&P 500, and one of those is that the company has to have multiple quarters of actually turning a profit, which Tesla is now doing, and that's why you might hear some of the buzz that Tesla will soon be included in the S&P 500. Well, that's all I have for you about this particular topic. I hope it was interesting, and I hope that gives you a better idea of what this number means each evening on the news. Next time we'll talk about the NASDAQ and what that means and how it's computed as well. Thanks.